What do I say? Okay, I have nothing to say, but however, we will do this question. So, I hope everyone is doing good. From tomorrow, college at 8 a.m. Array, I also have college at 8:30 a.m. Okay. Yeah. What to do? To take care of everything. So, okay, what is the question asking you to do, guys? The question is asking you to calculate two things. One, to calculate consolidated statement of P&L and other comprehensive income of blank company for the year ended what? For the year ended 31st December X8. And it's your job to calculate the carrying amount of investment in Arch company in the consolidated statement of financial position and for the year ended 31st December X8. That's for 2 marks. To prepare the P&L, it is of 18 marks. This is what the question is about. Okay. Now, let's read the information. See, the question is straight to consolidated statement of P&L. There is nothing extra that you have to do. All right. Understand, when you read the requirement, it is always important what is relevant to the requirement. You don't think like, I need to know everything in consolidation, not required. Okay. If you see this question is P&L, you also be P&L oriented. What goes to P&L, only that should hit your mind. Anything extra is not my cup of coffee right now. Okay. So read the information. Year ending is 31st December X8 it is. Okay. And we have owned 35% of Arch company since 1st June X7. That means Arch company was already there in the business as an associate. And we went and acquired 80% of Strip company on 1st April X8. That means in this year, is it mid-year acquisition or full-year acquisition? I have acquired on 1st April, so it becomes mid-year acquisition. Correct. And this was there for a longer period. So Arch company, since there is a 35%, it becomes an associate. And Strip company, since 85%, it becomes a subsidiary. This is the two information I got to know. And the statement of P&L for the year ended 31st December X8 are given for both Plank, Strip, and Arch. These are all the three informations I have. Now, all of you guys listen to this. A fair value exercise conducted on 1st April X8, where the carrying amount of Strip company of net assets were equal to their fair values, with exception of one item, that is of how much? The fair value of 8 million in excess of its carrying amount. That means we should have added this 8 million in where? In the fair value of net assets calculation. Correct? Yeah. On this date, the machinery had a remaining life of 3 years, where the depreciation is charged to cost of sales. Quickly analyze and tell me how much depreciation I would have reduced it from my post-acquisition profit. So I'm going to prepare. So since it is consolidated statement of P&L account, what I'm going to do, I'm going to prepare my first working notes as what? As post-acquisition profit. You don't have to prepare fair value of net assets at acquisition because there is no requirement of preparing goodwill or financial position, so not required. Okay. So what is my post-acquisition profit of Strip company, guys? If you all can see, the Strip company's profit for the year ended is how much? The Strip company's profit for the year ended is 66 million. So if 66 million is for the entire year, you have acquired them on 1st April X8. By the time you move to 31st December X8, from 1st April to 31st December, it is of 9 months. Can I say 9 by 12 of 66 million was your post-acquisition profit, guys? Can I say like that? Yeah. So what is the post-acquisition profit of Strip company? So I had the profit for the year of 66 million into 9 by 12. That becomes the post-acquisition profit. It will give a value of how much? It will give a value of 49.5 million. First thing. Now, if you would have done a fair value adjustment of this 8 million, you would have reduced fair value adjusted depreciation on this post-acquisition profit. How much you would have reduced? 8 million was the extra fair value that you have added, divided by on that date, useful life is 3 years, but it's your job to charge depreciation for only 9 months because the post acquisition period was only 9 months. How much it was, guys? 8 million divided by 3 into 9 upon 12. So 2 million is the depreciation. It's my job to charge it from where? Post acquisition profit. And it also adds to the cost of sales. Thank you. Over. This was adjustment, first adjustment. Yeah. Next. What is the next adjustment you have? Since acquisition, Plank company sold goods to Strip company totaling 39 million. Strip company had 1/4 of these goods in inventory at 30th September X8. Okay. And during the year, Plank company also sold goods to Arch company for 26 million, all of which were held in inventory at 31st December X8. All these goods had a markup of how much? Markup on cost of 30%. So I'm going to prepare next working note, that is of PERP. Okay. Second working note will be provision for unrealized profit. So what are we going to do here? Now you need to understand the common person is Plank company who sold goods to two different companies. What are the two different companies? Plank company is the ultimate seller. So you can expect to have PERP has to be reduced from where? PERP has to be reduced from which working note, guys? Which working note? Parent company is the seller. Where do you think I'll reduce PERP from? Working note number 5. But see, is it relevant for this question? No. Why? Because we are not preparing financial position. I don't want to know who's the seller. Okay. Or even if I want, even if I need to know, there is no required to prepare any working note number 5. So if the parent company is seller, doesn't matter still. If the subsidiary company is a seller, maybe because it is, I have to reduce it from where? Working note number 2 to understand how much profit should be given to NCI, how much should be added in parent company share, right? But other than this, you have parent company being seller and strip company purchased how much? Strip company bought a goods worth of 39 million. Correct. Now you guys need to tell me this 39 million should be reduced from two places. Remove or eliminate from where? From group, revenue, and cost of sales. Yes, people? Yeah. And how much is unsold on this? 1/4 of these goods were still in the inventory. That means 1/4 are unsold goods in the inventory. If I take 1/4, that is going to be 39 million into 1 divided by 4. 9,750,000 is the unsold goods. In this, what should I do? I should calculate PERP. So how much is, what is the PERP? You have markup of what? Markup of 30%. If markup is 30%, your sold goods will have a value of how much, guys? 130%. It's your job to calculate how much is 30%. So if you do that cross multiplication, how much is your PERP? Your PERP is going to be 2250. Now, what is the journal entry we passed? Not required. Okay, don't worry about it. End of the day, the PERP is going to get added where? The PERP is going to get added to cost of sales. If you know that, that's more than enough. This goes to where? Cost of sales in my statement of P&L account. That's enough. Okay. Yeah. Next, the same company has sold to Arch company, bought how much? They bought around 26 million, all of them lying in the inventory. Now, would you go ahead and eliminate from group revenue and group cost of sales is my question. Do we do it? Do we go ahead and eliminate from group revenue and group cost of sales, guys? No. Why? Because it's a associate company, we don't consolidate, but still the unsold goods value is how much? The unsold goods value is going to be 26 million only, because all of them were there in what? There in the inventory. So it becomes 130 percentage, and I have to find out how much is 30 percentage. That becomes my markup 30 percentage. How much will be that value if you do the cross multiplication, guys? That gives a value of is equals to 26 million into 30 divided by 130 percentage. That gives a value of 6 million. Now understand, this is the total perp. In this, how much do I take? I should take a share of associate. Was how much? It was, I have acquired them 35 percentage, and my perp that I could do the reduction is also 35 percentage only. Don't take the total value, guys. Don't make that mistake. Okay. 6 million into 0.35, it will give a value of 2.1 million. Understand, what do I do this? I debit cost of sales because parent company is the seller. But what do I credit with? Think and tell me. Where do we credit group inventory? Do we credit group inventory? Post acquisition profit share? No. Good. We credit investment in associate. If parent company is the seller, remember we will not have associates inventory to credit with. So hence I go ahead and credit my investment in associate, which replicates what? Which replicates the net asset of associate, the share of the value. So it's my job to go ahead and eliminate from where? Investment in associate. Tanish, remember? If I am a buyer, guys, I will have inventory to credit. But am I a buyer here? Associate company is the buyer. So hence we will not remember. And we did perp for associate. I'm talking about that. I hope you guys got it. Yeah. Moving forward to the next adjustment. So next adjustment may what do we have? We have the investment income of plan company for the year ended 31st December exceed includes dividend from strip company and arch company, and it's your job to see the note 4. It also includes the 5 million interest receivable on a loan made to strip company on 1st April 2000 X5. Wow. Okay. Okay. Let's prepare. What do we have here? If you can see, let's read the next adjustment also to understand how much is the dividend that we paid. So strip company paid a dividend to shareholders of 18 million on 31st December exit. Arch company paid a dividend of 31st December exit of 35 million. Guys, how much do you think it is included in the investment income of? You see, investment income of plan company, we have two dividends. One is from subsidiary, another one is from from the associate company. Now how do we showcase that? The investment income has to be eliminated a lot. Let's prepare working note number 3 for investment income. Okay, understand what is my investment income of plan company alone. So plan company's investment income as per your trial balance is how much, guys? As per your trial balance is 46 million. Okay. So in this first, what you have to do, you have to less dividend from whom? Dividend from strip company. How much do you think they would have paid? You see, for the all shareholders, they paid 18 million. That means for our parent, that is the plan company, they would have paid 85 percentage of 18 million. So the amount that they would have received a dividend income is how much? 18 million into 85 percentage. That is 15.3 million. First thing. Correct, everyone? Yeah. Next, what is the next thing we have? We have to deduct less. Dividend from where? Dividend from which company? Arch company. There'll be how much? How much dividend these people have paid? They have paid 35 million. In that, how much do you think is my share? It is going to be 35% only. That is going to be of minus 35 million into 35%. You will have to reduce 12,250%. Now, apart from that, look at this. We can also see that we have a, it also includes 5 million interest. 5 million interest receivable on a loan note to strip company on 1st April exit. So what do you have to do, guys? You have to go ahead and reduce that as well. Correct? Yes. I'll go reduce what? Less interest or intra-group interest. You can consider that as intra-group interest. From whom? From strip company. It's your job to go ahead and eliminate that too. That is of how much? That is of 5 million. And then we have a strip company. How much is strip company's investment income, guys? Strip company's investment income would be 2 million, but you don't take the entire 2 million. You'll only take the post-acquisition period of time, that is 9 by 12. You'll take 2 million into 9 divided by 12. If you do all of this, what is your actual investment income? Why are we reducing it? Can we include dividend income from our own subsidiary and our own associate, Preeti? First of all, can we include dividend income from our own subsidiary? Can you pay dividend to yourself? No, right? Yeah. But provided, ma'am, why are we reducing it from associate? See, understand, when I showcase the profit, why will you showcase the part of the profit once again? I'll take the equity method. I'll show the part of the profit. That is how much? That is of whatever the profit ka share that we will get, that I'm any which way showing. Correct. Why will I show once again dividend about it? Dividend is just a part of profit, no appropriation of the profit. You're getting? Sure. What is 1,500? Okay. See, I told you 2 million is the strip company's investment income. Can you see? I made all the necessary adjustment in plan company. In company, it's my job to multiply 9 by 12 because the post acquisition period is 9 months, so that I will get to know the group investment income. Correct. That's it. What is your group investment income, everyone? Your group investment income will be this much, which is 14,950. I hope everybody is able to understand. Oh, Sarunan, now are we dealing with investment income or interest expenses? We're dealing right now with investment income. So investment income goes to investing category. When we go to interest expenses, then we will go through financing category. Okay. Clear now? Chalo. Let's move to the next bit. What is the next bit that we have? We have in plan company's consolidated statement of financial position at 31st December X7, the carrying amount of investment in Arch was 145,000, and this was as per the uh, what is it, accrued. Sorry, this was as per the last year's closing balance. So if we have to prepare that, the remaining part, we'll be able to prepare along with this. So I hope till now everyone is clear. Okay. Guys, in your ACCA study hub, they have not made it right here. They have not got the question correct. They have not got the answer correct. Let me tell you one small hook here. What is the problem with this question? Anybody? Anybody? There's one small problem with this question. What is it? Everything we do, you look at this. They have given a small hook here saying, read very carefully, everyone, along with me. They've showed it also includes 5 million interest receivable on a loan made to strip company on 1st April X side. That means, is my post acquisition profit 49,500? Look at this. What is my total profit for the year ended 31st December 2000 X8? 8 only, no? X8, it is of 66 million. That's what we have calculated and kept. Now, everyone, listen very carefully. You need to understand, is it accrued evenly over the years? Is it accrued evenly over the years? Not at all. Look at this. This is my value, 66 million. Correct. But the problem here is, it is not accrued evenly over the years. I'll tell you why. Assume my year beginning starts from where? Year beginning starts from 1st Jan 2000 X8. Okay. Till 1st April. Till 1st April 1000 X8. I didn't have any kind of other problems. When I moved to till 31st December X8, what has happened? I have two things happening. One, I have now a parent company coming into the part, right? So that means till 1st April X8, I didn't have any kind of loan notes in my books of accounts. I was not paying any kind of interest expenses to this, correct? Yeah. But the moment after 1st April, I started paying an interest expenses of how much? I started paying a interest expenses of 5 million for the 9 months. That's what they're trying to say. I'm talking about strip company. Okay, guys? Yeah. That means this 5 million of interest expense was purely happened during the post-acquisition period. Correct? That means I should reduce this interest expenses only in the post-acquisition period, not in the pre-acquisition period. Correct. So that means if there were no interest at all, then my profit would have been how much? My profit would have been how much? If I add back that 5,000, it would have been 71 million. Correct, people? So if I have to calculate 71 million for the first 3 months, I would have earned approximately 17,750 because in the first 1 month, 3 months, I would have made 17 million accrued evenly over the years. This way. In the next 6 months, I would have earned how much? The remaining value, right? That is 77 million into 9 by 12. Correct? 53 to 50. That means I should have earned 17,750 in first 3 months and remaining 53 to 50 in my last 9 months. And it's my job to reduce the interest expense only from the post-acquisition profit. That means after 1st April exit, not before 1st April exit. Do you all agree to this point? All of you guys able to understand this part? Is there anyone who didn't understand? Understood, guys? So what is my post-acquisition profit? My post-acquisition profit is not 66 million into 9 by 12. You have to understand there is a specific expense happens in the last 9 months. So it's your job to reduce that expense only in the last 9 months profit, not in the entire profit. Okay. Saravanan, see, we have done a Pander company question. Just watch that once. I'm sure you'll be able to understand. It's the same concept. If you've understood that, I'm sure you understood that. You'll have the same understanding here. Manoj is there. Manoj, you understood? Yes, you're right. Yeah. Apart from this, I don't think so. Anything else is there. What is my post acquisition profit? My post acquisition profit will be of 48,250. Not, I will not take directly 66 million minus 5 million. I'll take 48,250 minus 2 million. It will be 46,250. In that, I will give NCI share. How much, guys? NCI share is going to be 15 percentage. So out of 46,250, we'll take 15 percentage to NCI, that is 6938. Okay. That will be with my working note number 1. That is post acquisition profit of strip company. Is there any other adjustment or working note that I have to prepare? Of course, yes. What is that working note that you have to prepare? One thing you have to prepare would be interest expenses now. One thing you'll have to prepare would be interest expenses now. Okay. So how do you do interest expenses, guys? Very simple. Keep working note number 4, the group interest expenses. Guys, we did the similar question already. Yeah, Panda company. Okay. So look at this. What is the interest expenses you'll have to take? You'll have to take 12 million of parent company. So you'll not take the entire 14 million. In that you eliminate 5 million. It's an intra-group expenses, intra-group interest. Remaining 9 million, it's your job to multiply with 9 by 12. So how do you take? You take the plank companies. First, how much is it? It is of 12 million. Correct. And strip company, it is actually 14 million. But would you take the entire 14 million? No. Strip company may I take out of 14 million. It's my job to eliminate 5 million of what? Intra-group interest first. Then after this, remaining 9 million, I will multiply with 9 by 12. So when I do this, I'll get a value of how much? I'll get a value of 6750. What is my group finance cost or group interest expenses? It will be of 12 million plus 6750. It's going to be 18,750. Yeah, this goes to your consolidated statement of P&L account. Guys, in your ACCA study hub, this question is mistaken. Please don't go through the answer there. It's my humble request. Yeah. Anything else is there? I don't think so. You don't have to prepare a cost of sales working note, but if you want to prepare, you can prepare. You have only 2 perps and 1 fair value adjustment, guys. If you really want to do it, you can do. But otherwise, ma'am, I can directly do it. Yes, most welcome. I don't think so. It's a problem. But somebody who's going to do working note number 5 for cost of sales, you can just listen to this. What do we do? We'll have plan companies, cost of sale. That is parent company's cost of sale. How much is it? It is of around 320 million. And then you'll take strip company's cost of sales. But one point is here, strip company's cost of sale is 18 million, but you'll take 9 by 12 of it. Okay. So you will add 81 million multiplied with 9 by 12. Then what do you have to do? Less. Always see, is there any intra-group sale? Yes, we have. Remember, 39 million intra-group purchase, we call it as, not a sale. There will be of 39 million. Please reduce it. And then next, add, I have 2 perp. Okay. So both perp together, you can go ahead and add. One is 2250. Another one is 2.1 million. So you can add up to these two together and you can write 2250 plus 2.1 million. It will be of how much? It will be of 4350. Then again add fair value adjustment. Fair value adjusted depreciation coming from working note number 2. Give reference to all the working notes, guys. Yeah. Working note number 1, sorry, that was how much? That was 2 million. So you can go ahead and add that here. What will be the group cost of sales after all? The group cost of sales after all is going to be 348,100. That will be what? That will be your group cost of sales. Apart from this, is there anything else? We have associate, guys. See, the question might look very small, but there are a lot of other things that you have to do also. So we have associate. It's your job to write working note number 6, share of profit, share of Arch company for the year ended. Understand what is the total profit? Total profit is total profit for the year is how much? Profit for the year is approximately 92,570. In that 92,570, how many percentage will you take? As a parent, you are entitled to take 35 percentage. Since we are accounting for the total profit, that's the reason we have eliminated the dividend coming from them. Okay, so that'll be of 32,400. Is there any adjustment? Do you see anywhere goodwill? Sorry, do you see any impairment loss? Do you see any PUP because the associate is selling? I don't think so. You don't even have to have working note for this, guys. Not required. Don't prepare. Okay. With this, can we prepare consolidated statement of P&L? Very much yes. Consolidated statement of P&L account for the year ended 31st December X8. What is the first thing that I have to go ahead and consider? I take revenue. See, parent company's revenue is how much? Parent company's revenue is 705 million. I'll take plus strip company into 9 by 12 and it's my job to reduce intra-group sale, right? If I do that, how much do you think my revenue is going to be? Why this is coming? Yeah. How much my revenue is going to be? It's going to be 705 million plus I'll take 218 million, that's of subsidiary company, but only 9 by 12 minus this 39 million of intra-group sale. It will give me a revenue of how much, guys? It will give me a revenue of 2,829,500. Thank you. Then less cost of sales. We have calculated and kept aside. Cost of sales coming from working note number, I think it was 5. So you can go give a reference directly to the cell. That is of how much? 348,100, right? And then I'll get what? Then I'll get gross profit. After gross profit, what do we have to go ahead and less? We have to go ahead and less. I'll calculate gross profit and all of that later. It is not relevant on me. Then you'll go ahead and less what? Selling expenses. Is there any adjustment in selling expenses? Not at all. What will you take? Entire 58 million of what? Entire 58 million of the parent company, and you take only 16 million into 9 by 12 as how much? Into 9 by 12 for Arch company. If you take that entire part, it will be your selling expenses. It will be of 70 million. Then I will have what? Then I will have less administrative expenses. Again, how much is the parent company, guys? Parent company is 92 million. And you add 28 million of the entire subsidiary into 9 divided by 12 should get a value of how much approximately? 113 is what I'm getting. Then after administrative expenses, I'm getting operating profit. What you can do, you can go ahead and write. Can go right. Operating profit. Once out after operating profit, you can show what is your investment income. So you have two things to add. One, I have share of profit. That is also investing category, right? Profit from Arch company. What you can do directly, you can write it here. So how much we have, guys? We have the profit of 92,570. That into 35%. 92,570. That into 35 percentage. That gives up a value of how much? 92,570 into 35 percentage. It will be of 32.4 million. Then we have calculated investment income. Investment income. That comes from which working note? Working note number 3. 3, how much is it? 14,950. Let me write it directly. But you guys give a reference to each cell, guys. Please don't disappoint me. Yeah. 14,950. Next, what do we have the next thing? After the investment income, I think I'll get PBFID. That is profit before financing and income tax. That will do calculation later. Less will take interest expense that we've calculated working note number 4. So how much was that? That'll be of minus 18,750. So after that, what do I get? I will get profit before taxes, that is PBT, and then I will go less income tax expenses. I don't think so any adjustment is there. Guys, every time you do this, like multiply with 9 by 12 and all of that, you'll still get 1 marks for it. So don't miss out on that part. 51,500 plus 15 million into 9 divided by 12. So that gives you a total income tax expenses of how much? I'm getting 62,750. Wow. Okay. And then we will have what? Profit for the year. See, it's our job to showcase what? To showcase how much is the profit that we can expect to have. Don't worry, it'll all change. What is the profit for the year? 260. Or did I make any mistake? Correct. 264 to 50. This will be my profit for the year. In this, guys, how much I will give a share to my parent? How much will I give the share to NCI? We have already calculated. See, NCI profit attributable to NCI coming from working note number 1. How much is it? That was 6938. What is attributable to Plank company's shareholders, that is owners of the Plank company? There'll be the remaining value out of 264 to 50 million. The remaining will go to whom? Remaining will go to the owners of Plank company. First thing. Is it all done? No, we have other comprehensive income as well, right? Understand, guys, it is not something extra that you're going to learn. Other comprehensive income is, again, we just have to give the share to whom? Share to the relevant people. What is it? We have OCI, or yeah, you can write it as other comprehensive income. So in other comprehensive income, we have what? We have Gain on revaluation surplus. Let's see how much we have. Gain on revaluation surplus. How much it is? Can all see 2.8 million of the plant company. But how much is it for the, how much do you think it is for the strip company? Is it 3 million I'll have to take or 3 into 9 by 12? What do you guys think? Please don't take 3 into 9 by 12 because they've clearly said what? They've clearly said all the property, everything was equal to their net assets. If there was any increase happened, it purely happened after the what? After the acquisition. So you take 2.8 million plus 3 million. So your gain on revaluation surplus is going to be 2.8 million plus 3 million. Don't take that as 9 by 12 because it purely happened on what? It purely happened after acquisition. So if I have to find out what is my total comprehensive income for the year, the total comprehensive income for the year would be sum of those two, which gives me the value of 270,050. This will be the value. Again, it's your job to showcase how much is the OCI, how much is attributable to NCI, guys. Don't waste your time. Okay. 6938. In that, additionally, I would have given a share of 3 million into 15%. Apart from that, rest all goes to where? Rest all go to blank companies share holders itself. That will be the remaining value. When we do this, we will get how many marks? 18 good marks. Okay. Now, hold on. We have the next 2 marks as well. What is the next requirement I have? I need to find out what is my investment in associate. Yes, people? That is the B requirement. What do you do? What was the carrying amount of the investment as at 31st December X7? That they've calculated and given that is of 1,445 million if I'm not wrong. Correct? Take that value. 145 million. What all we have to add? We have profit, please add. Add profit of associate. A share of 35% was how much? It was, we have calculated and written somewhere here, 32,400. Job done. Okay. Kuch impairment hua? Like, I mean, there was any impairment? No. But did we receive any dividend? Yes. Less dividend received. Which working note? Working note number 3 we have calculated and kept. It's your job to go ahead and eliminate that. How much is that working note number 3 may dividend received from Arch Company? 12,250. Eliminate that. Then do we have any perp? Yes. Less perp coming from working note number 2, I believe. That will be of how much? That will be of 2.1 million if I'm not wrong. Yes, 2.1 million. Eliminate that. That gives you the carrying amount of investment in associate as at 31st December X8, which goes to our financial position, will be of how much? The sum of all of this, which gives me a value of 163,050. For this, you'll get 2 marks. Now, I'm done with the question explanation, guys. Please tell me if you have any questions on this consolidation question. Any question, any doubts, please do let me know. Yep. If you guys are tired, I understand. I'm sharing these notes to you right away on your WhatsApps, on your Telegram, sorry. Okay. But Any questions?